candidates. Now, the front runner for the May 9th elections is Ferdinand Marcos Jr., or Bong Bong, whose running mate is the president's daughter, Sara Duterte Carpio. Also running, current Vice President Lenny Robredo, Manila Mayor Isko Moreno, and Senator and former boxer Manny Pacquiao. Feels wide open, it seems. Let's bring in Victor Manit now, Country Director of Bauer Group Asia. He joins us from Manila. Victor, thanks for your time. First of all, when you look at the polls leading into next year's election, who do the Philippine people want to see in power? Do they want the status quo? Or if it is change, what do they want to see changed?
Movement of
Good evening, everyone. Good afternoon. Good morning, depending where you are. I just want to give you a quick update on our trade on New York session. So we have the British pound, we up 65 pips, and Aussie franc, we are still up 14 pips, and British pound 47. EuroCAD is 238. I want to show you the EuroCAD. You can see we have the sell signal from here, and this is about 230 pips. Now we don't take the buy signal here. I know we have a buy signal, but we don't have a buy signal here. In order for you to take the buy signal, you have to take this have to be blue, otherwise you're not taking the buy. So you still short from right here until here. That's why we are up to 38 pips in EuroCAD. Euro dollar also, we have a good sell signal today. We hit the first target, second target, third target. Okay, right now we don't have any buy signal. For gold trade in the London session today, we did 349, 395, 283, 48, 221, and we have a one loss was 186. So we did about $1,110 today. Now EuroCAD. So Aussie dollar, it's up 49 pips. It went against us about 18, 19 pips, and now we are in a profit. This is OCCAD. So this is like fourth trade is Aussie franc is 53 pip. We did make a profit, then went against us 20, 30 pip, and we are back to profit. This is our position right now. It's plus 53 pips.
I've seen with the Senate is that you have 24 Filipino senators who see themselves as independents. And as new presidents gets elected, you will see them shifting their alliances. And we have seen that in the filing of candidacy of majority of the elected or election senators. They have defined themselves independent of President Duterte, though they define themselves as coalition partners these past 5 years. So that's Victor, a big challenge for the president.
Yeah. Okay, Victor.
The dollar franc was also a good buy. You can see we have a target 1, target 2, target 3, and this is blue. And we've been selling for last few days. Any rally you sell because you have this combination with this sell signal, with this sell signal. You don't take this buy, you don't take this buy, only sell. Now, when the two condition blue and blue, you go long. So it was a good one on euro. It was a sell. Dollar yen, it was a buy. Dollar franc, it was a buy. Good buy. And Aussie, we have an Aussie dollar. We have a good buy signal here. Then we start going sell signal right now. Dollar CAD, we've been selling for last day and a half. Actually, the sell start from here. So for last 2 days, the dollar CAD has been selling New Zealand dollar. It was a buy. Then we start to go in a sell mode. Aussie franc, we have a buy then sell. We have a buy signal. And even if you took a sell signal here, you get stopped out, then you go back to long. So you have long signal, then sell signal, then a buy signal. Aussie yen, you have a buy signal, and right now we are ready for a sell signal. I don't like to trade Aussie New Zealand because it's going up and down and is very sharpy. So, and the spread is very high. So I don't usually trade the CAD yen. It's like in a buy mode, and we're still in a buy mode until now. Dollar franc, we have a sell signal. Right now, Euro Aussie, this is the one we did like 238 pips. So you can take a profit or you can trail it if you want. Euro CAD also with the same start the sell signal exactly from here. Euro franc. Now, it looks like we don't. Let me check something. Okay. Euro franc, we have a sell signal. So you can trade all day. Whatever signal you have, you just take it and make 15 pips, 20 pips in every trade. You know, like you have a sell signal here, sell signal. Even if you go long here, it didn't work out, you have a small loss, but you took like 50, 60 pip and another 60, 70 pips and you lost 10 pips. So you made two trades with 120 pips and you lose 10 pips. So you end up with 100 pips or 110, okay? Euro yen, it's in a sell signal. Right now, we have a sell, then right now we have a buy signal. Now I wanna show you another one, which pair you need to trade. So let me show you something here. So the one we what you can do, you can just like here for the oil, every time you dip, you buy. So if you've been buying right now, you end up with a profit. Euro dollar, you've been selling all day, like you can see. Pound dollar, you don't do anything because it's a buy, a green and red. Here, every dip you need to buy because you have all green here. So every dip you buy. Here, dollar CAD, every rally you sell. So you have a buy signal in oil, YM, you have a sell signal. The Dow US market today, it's a sell signal. Bitcoin, it is starting in a sell signal, and you can see every rally because this is red here, so you've been selling, okay? So, and the gold, it was sharpy, up and down. That's why we trade. When we see rally, we sell. When we see dip, we buy. When we see something like that, okay? So this is basically the trade we have. Let me recap this again. So we have bound the dollar 47 pips. We have EuroCAD 238 pips. And we have Aussie dollar 49 pips. And Aussie franc 53 pips. So if you go into sleep, you can cash and flat all your position. If you want to watch in next few minutes on Asia, you're welcome to stay in the trade. It's up to you. You make your decision. Okay. So I will go read some news. If I have anything important, I will post it on the chat. If I do any new trade, I will post it on the chat for you. If you are sleeping right now, everything will be recorded. So when you wake up, you can just watch it when you have free time. If you are working and you don't have to see us on live on YouTube, when you have a chance, you just look and see what's been happening, okay? So if you guys have any question, you can text your question on the chat room, or you can email us. You can email GH. Now, if you are brand new to the chat room, I'll be glad to do free session with you one-on-one to show you exactly how we trade, and so to get familiar with our trading strategy, because we have a lot of information. You need to use all the information on the right time, when to use this information, when. So I need to explain everything if you are brand new. So feel free to ask any question, and I'll be glad to sit with you for 15 minutes or 20 minutes or 30 minutes, whatever, until I get all your question be answered, okay? So I will do some scan, and I will see if I have any new information for you. I will let you know, all right?
Welcome back. Tuesday here on Squawk Asia. Temasek is announcing today the launch of a platform to encourage the commercialization of sustainable foods in this part of the world. The Asia Sustainable Foods Platform is going to have a threefold role to help food tech companies. As an enabler, one, to advise and support product commercialization. As an operator, two, providing manufacturing capabilities and also market intelligence to help companies scale up. And three, as an investor, providing capital as well as networking. Let's bring in Anuj Maheshwari, Managing Director, Agribusiness at Temasek, joins us from elsewhere in Singapore. Anuj, great to see you. Welcome back. Good morning, and hope you're continuing to keep safe. So having Temasek as providing capital to businesses on this platform of yours, I mean, it's a monster investor, one of the biggest state investors in the world. Where else is the money going to come from?
Well, Martin, good morning, and thank you for having me back here again. Look, it's a very exciting time in agri and food tech, as you know very well. There's so much attention around the world. I'm not worried about where the investments in agri-food come from. The latest report by AgFunder has estimated that over $30 billion of investments around the world are going to go into agri-food tech. And why not? We need much more of that if we want to change the food system to be a net zero food system, obviously have zero waste and of course zero hunger. This is something that the Deputy Prime Minister Heng yesterday mentioned in the launch of our inaugural SIAW event. So capital is aflush. There are impact investors. There are private equity funds and venture capitalists. But what I'm seeing, Martin, is a lot of family offices want to put their money at work in food tech and agri-tech. The size of deals is increasing, and more interest is coming from around the world.
Are IPOs and are SPACs in the plans?
Absolutely. There is a lot of interest from SPACs in the sector as well. We've seen some companies go public via the SPAC route recently, especially in the United States. We are seeing activity in Europe as well. The IPO markets have obviously risen to this opportunity after the IPO of Beyond Meats last year or early year before. But a lot of companies are now getting to the scale where they can get public markets to invest in it. But even before that, we've seen in some of the companies that we are invested in is that public market investors, large institutional investors, are beginning to take stakes in these companies in anticipation of them going public.
Anuj, it's really interesting you mentioned alt meat. Does sustainable food now mean more plant-based protein products and companies in this space? And is livestock farming now being perceived almost in the same category as coal versus renewables?
That's a great question, Shri. So let me take the second question first. Look, livestock farming has its challenges from a resource perspective. And over the last 2 to 3 years, a lot of investors have realized that there are issues. Now, but we have to be very clear where the issues lie. The issues are predominantly in ruminants, which produce obviously beef, lamb, dairy. Ruminants produce almost 40 to 50% of methane that goes into the atmosphere, and methane is 100 times more potent than carbon dioxide, though it doesn't stay in the atmosphere for that long, though it doesn't really matter because we have a goal in the more shorter term for climate change. So really there is a heightened alert among investors who see anything that requires cattle for production as not being sustainable. However, saying that, there are some interesting technologies that are coming up to also decrease the methane and the emissions that come out from cattle farming as well. Those technologies are fairly early stage, but if that industry has to survive, it will need to really transform itself significantly. So certainly the heightened level is there, but look, we're not going to shift overnight to alternate protein. We still need livestock farming. We still need new technologies, whether better feed technologies, better animal health technologies, to continue to do that. To your point on alternate protein, I think it's going to be a spectrum. Plant-based protein is only one of the solutions when it comes to alternatives. There's so many others that we can do. Microbial proteins, we've just announced a joint venture with ADM to scale up microbial proteins in Singapore and then eventually across Asia. We see a huge opportunity in using microbes to create proteins that really look like the same thing as the original product. Cell-based meat proliferation is going to really take off. I mean, certain consumers are going to choose that, and eventually, Sri.
Anuj, can I bring in the controversial aspect of all of this and ask you about genetically modified crops? Are they a game changer, or are they entirely at odds with sustainable practices?
Again, a great question, Shri. The debate has been on for the last 20 years, and we really haven't been able to sort out that. But look, here's how I think about it. When it comes to food, everybody has their point of view because we all are affected by food, and there is never going to be one answer. Certain consumers are going to choose organic food. Certain consumers are going to be more willing to take a view that they are ready to adopt science and technology, which is where genetically modified food comes in. So it's really a spectrum. I think what regulators need to allow is for safety as the paramount concern, but also allow for the proliferation of science and technology solutions. Genetically modified products have come a long way. We're seeing CRISPR-Cas gene editing technologies really produce things which don't use transgenic sort of induction of genes. We've backed some companies like Tropic Biosciences, which are using gene editing technologies. So really, as I look at the future, I look at gene editing as a way to continue to improve productivity in crops, but also in the area of alternate proteins to provide a wider set of solutions that are available to the consumer. So again, safe use of technology, genetically modified gene editing is really going to continue, and consumers are going to, at the end of it, choose as long as these technologies are safe. And I am fairly confident that the regulators in the world are going to do a good job with choosing the safest technologies.
Understood. Anuj, thank you for that. It's a fallacy, though, to believe that higher commodity prices mean a windfall for farmers and profitability, because rate margins are just so razor thin or under pressure because input costs from fuel to fertilizer are going up. Explain to me how sustainable practices and your emphasis on sustainable farming can help farmers in the developing world especially boost productivity and their yield.
Yeah, absolutely. Look, first of all, there are two things. One is sustainable practices, and the second one is digital platforms. We are a big believer that digital platforms in food and agriculture are going to provide a sort of level playing field between farmers and producers. In the past, especially in Asia, where there is a big proliferation of smallholder farmers, there are just so many middlemen who cut the margins that farmers usually get, because the farmers just don't have the information on what's required, when is it required, how do they get it over there. So we are seeing a massive proliferation of digital platforms, Sri, across Asia. And this is not just in conventional crops, fruits and vegetables, it's in things like fisheries. In Indonesia, we're seeing very interesting startups which are coming out, which are using digital platforms to buy from smallholder farmers, but also track where their fish comes from so it can come from sustainable sources. So I think that level playing field is the first step. The second thing is sustainable practices. What it does is that it gives the power back to the producer. And so you no longer are producing a commodity, you're producing a commodity plus. And therefore, the origin of the product makes a big difference. The farming practices make a big difference. We are seeing big companies, whether it's PepsiCo's of the world and others, are saying we're willing to spend a premium on buying products that come from sustainable practices. So I see that as bringing value back to farmers. But yes, certainly, farming is a difficult business.
Anuj, I think that's such a key point. And when you mentioned handing power back to the producers, it hands them negotiating power if they know the data, if they know the pricing in the market. Anuj, we've got to wrap it up there. Thank you so much for joining us, as always. Anuj Maheshwari there from Temasek. Japanese markets open at the top of the hour. We'll bring you a preview after this break. Stay with us.
Welcome back. Time check. We're about 3 minutes away from kickoff up in Tokyo for the market there. Tuesday trade. We'll have a quick preview coming up in just a bit. Right now, the SGX Nikkei futures are handicapping a softer down start, dollar yen at 114.15. One stock we're going to be watching closely today. Take a look. MUFG forecasting record profits this fiscal year after an 83% surge in net profits last quarter. Like a lot of other banks, MUFG made higher than anticipated provisions for the pandemic impact. That cash, as well as lower credit-related costs, helping MUFG to raise net profit estimates for the year by almost a quarter to $9.2 billion. MUFG also saying it'll buy back 150 billion yen, or the equivalent of about $1.3 billion in its own shares by the end of this fiscal year. Keep it right here on Squawk. The opening numbers for Tokyo as well as Seoul. Don't forget, when we come right back after this.
Good morning, 8 a.m. here in Singapore, 9 a.m. in Tokyo. I'm Sri Jagaraja with Martin Song. Japanese and South Korean markets just coming online. Let's get you across today's headlines. Martin.
All right, Sri, let's do that. Wall Street rally, take a look, running out of steam overnight, leaving major indices just ever so slightly underwater, but negative still as yields marched higher again. That didn't help. Dollar, meantime, hitting a 16-month high, weighing on oil. U.S. President Joe Biden signing his $1 trillion infrastructure bill into law as another social spending package, which is, don't forget, twice that size, could head to a vote in the House later this week. And Biden getting that win ahead of a virtual summit with his Chinese counterpart Xi Jinping just a little later this morning, with Taiwan, trade, and cybersecurity expected to top the agenda. All right, let's get right to markets. First things first, as we always do, top of every hour. You've got Tokyo and Seoul just joining a Tuesday trade. It looks like both are off to a bit of a weak start. Korean market, the Kospi in Seoul is down 0.25%, as is the Nikkei 225. Sydney is down a bit more than that, about 0.5% behind right now. That market's been up and running for about an hour. Will Clorish, let's check in and find out what's going on. Good morning.
Good morning, Marty. Yeah, we're off by 0.5%, like you did say, and we're seeing weakness across every single sector. I suppose the worst for wear is the material space that's off by around about 1.2%, and you'd have to squint to find any kind of signs of life when it does come to positive movement. And even especially when you think about, the risk-off kind of mentality, you generally do see the gold players going higher, but that just isn't the case today. In fact, there's probably about 2 or 3 that I can see that are of any kind of decent size that are indeed positive at the moment, one of which is actually Fortescue. And I bring that up because I do want to talk about iron ore just a little bit. We continue to see the price coming down. It came down ever so slightly in the Asian or the night session for the Dalian iron ore futures. So it retraced some of the heavier losses that we did see mid-session after we did get that weak Chinese steel production data. There obviously is this expectation that we're going to see that continue to track to the downside. We've had word that in Hebei, which produces around about 30% of the steel, or in Hebei, which is one of the main steel producing regions in China, they're actually going to be cutting their steel production by a further 30% for the next 4 months. State media over there in China was reporting that. Again, this is just yet another input into the weakness that we are continuing to expect to see when it does come to steel production and ergo iron ore prices moving forward. And although we have also seen a little bit of a downdraft over the past, say, a couple of weeks, or I'd say around about 1 week, because freight rates have actually come down considerably when it does come to the bulk freight rates, and that obviously has come off the top of these prices that are being paid. But I also want to mention that there is the macroeconomic data coming through today, or not data so much as commentary in a sense, because in around about 25 minutes time, we do get the meeting minutes from the RBA's November meeting. That obviously was the meeting that they basically abandoned the yield curve control policy. There might be a few tidbits in there, but you've got to remember that he also did the speech and Q&A following on from that. So a lot of anything that's going to come from that determination is going to be already known to the market. So it really is the inflation speech, or the recent trends in inflation coming up at 10:30. That could be, I suppose, critical when it does come to, the economists and I suppose the people betting on the markets like the bondies and the Forex traders. That will be key in terms of their determinations as to policy moving forward.
Will, excellent. Thank you for that update. Let's bring in Tai Kui now, Asia Chief Market Strategist, JP Morgan Asset Management. He joins us from Hong Kong. Tai, good to see you. So it looks as if Xi and Biden may very well start butting heads again over trade, over Taiwan. Is this going to rankle the markets, or have we seen this movie before?
I don't think the market is going to react too much to this conversation. Obviously, first of all, I think it's good that the two leaders are in touch and talking and trying to at least address some of the differences. But I think a lot of the focus is going to be, as you rightly said, on Taiwan, on the geopolitical side of things, rather than trade, because I think that's really dedicated to the U.S. Trade Representatives and Catherine Tai for that to be resolved. So I think the market will obviously monitor this very closely this morning, but I think we probably won't get a huge amount of reaction from investors.
So arguably another brick in the global wall of worry, but not a major brick. But domestically in China, Tai, the macro position continues to look extremely challenging. How is this going to test the pro-equities view in this region, if not globally?
Well, I think you're absolutely right. The Chinese economy, if you look at the momentum in the past few months, have been slowing down. Obviously, the Q3 numbers were quite disappointing. But I think the good news is that if you look at the October data, it's starting to stabilize. I think it will take a little bit longer for the economy to rebound. But I think some of the biggest challenges, like power outages, for example, some of the challenges in the property markets, I think that we've seen not necessarily the worst of it, but certainly the market has priced in a lot of those bad news. So you're absolutely right. I think the economic challenges are still very much here, but I think the market is also reflecting that. And in fact, if you look at the positioning, if you look at a lot of technicals, the Chinese market does start to look a bit more attractive. So we are starting to see somewhat adventurous investors tiptoeing back into the Chinese markets.
Tai, good to see you again. Welcome back. Let's talk a little bit more about the U.S. side of this whole U.S.-China relationship. And we've been talking about how President Biden finally signed into law the first leg of stimulus, that $1.2 trillion infrastructure bill, into a law now. Do you think, is there a risk or worry that as far as his legislative agenda goes, look, this is about as good as it's going to get? Because, Build Back Better, 3 times the size, is going to be pretty rough sledding. And whatever it actually does manage to get passed is going to be significantly watered down, and we haven't even talked about how hard it's going to be to get higher taxes through.
Yeah, I think we are moving further and further away from that $3.5 trillion price tag in terms of the Build Back Better. As you know, even within the Democrat Party, there's significant division on how big such a legislative spending should be. So I do think that this could be watered down. I think it's going to be significantly reduced, but I think there's still enough runway for the Democrats to come to a consensus of how to pass this through in the next few months. Of course, we've got the midterm elections coming up in less than a year's time. I think Democrat really needs to put a foot on the accelerator, really trying to regather some of the momentum as they start to campaign into the next November elections.
Would it be fair to say that, back to U.S. China, I mean, the good news is, I mean, they seem to be on the same page in terms of climate change, right? And they're trying to push more aggressively to achieve targets or go down that road. For business, though, and for investors, this whole thing about decarbonization doesn't totally sit so well with them, does it? I mean, not so much the cost, although that's obvious, but also the uncertainties.
Well, you're absolutely right. I think the US, China, and many, if not all, governments, at least they show the willingness to commit to decarbonization. How they achieve that, that's going to be a much more difficult exercise, as we've seen in the past 2 weeks with COP26. So having an agreement coming out of it, I think that's good news. But obviously, there are some areas which I think a lot more work still needs to be done. From a business perspective, obviously, a lot of the industries that will enjoy the tailwind of decarbonization, like renewable energy, electric vehicles, and associated components, that's obviously great news. But I think the challenge here is that, as you know, some of these areas we've seen, for example, solar power prices have been coming down over the years. So you still need to be very careful in picking the right companies who are competitive in this area, rather than just blindingly sprinkling investment dollars into the sector that seems to be benefiting. At the same time, on the other end of the spectrum, iron and steel, cement, fossil fuels, these are clearly going to come under pressure, whether it's carbon pricing or other regulatory concerns. But again, you see companies that are innovating, they are moving further ahead in these areas, trying to reduce their carbon footprint. I do think those companies will look attractive at the end of the day.
Tai, externally, what are you expecting on the taper and then tightening in 2022? And are we ready for all of that out here in especially EM Asia, or is there a risk we could see outflows? What's your baseline scenario of what happens?
Well, I think the QE tapering is very much reflected already. The Fed announced this in November, in this November meeting. I don't think that created a lot of havoc in the markets, including in Asia or EM. In terms of interest rate increase, I suspect the quickest they can actually execute this will be the end of 2022. And again, that's starting to be reflected in both the futures market and also the Fed's own forecasts. So as long as the Fed is able to really set expectations appropriately, the impact on Asia and EM should be limited. And also, don't forget, I think Asia is now on the cusp of a much more comprehensive recovery, with tourism coming back, with domestic demand coming back. So I do think that that should provide a bit more of a cushion to insulate Asia and emerging markets from the potential impact from higher rates in the US.
All right, and I guess the key question is, we're looking at the DXY still sitting above and holding at 95, Tai. Let's say Biden's legislative agenda stalls, right? I guess that does increase risks to growth. Is that going to be reflected in a safe haven bid into the dollar and keep it at 95? Or I've heard some people calling 96 half by before the year's out.
Well, I do think you're absolutely right. Two things. One is that if you get a delay in the legislative agenda and risk aversion sets in, that's a stronger dollar. But if you get the legislation through and growth looking much more constructive, that in the near term is also good for the dollar. So either way, I do agree that the dollar could look stronger as we run towards the end of the year. But into 2022, as the global recovery becomes much more comprehensive, much more widespread, typically that will be negative to the dollar as risk appetites start to spread further beyond just the US or Europe into Asia, into emerging markets. So I do think we could see a dollar trend where you get some strength in the near term, but as growth starts to spread out further, we should get a softer dollar in 2022.
Hey, Ty, Thailand, the data showed us recently slipped back into contraction as far as the economy is concerned. Where does that leave Southeast Asia broadly?
Well, actually, I'm pretty constructive on Southeast Asia. As we mentioned earlier, the vaccination rates around the region is starting to pick up. I think more and more governments are trying to at least adopt the live with COVID approach. If you look at Thailand, you're absolutely right. The Q3 numbers were very disappointing, but the recent tourism number is starting to accelerate. So while we may not have completely shrugged off the threat of COVID-19, I think Southeast Asia into 2022 should start to look more constructive for two reasons. One, domestic demand is starting to come back as more people getting vaccinated, with vaccination rates pushing towards 60, even 70% in some countries. Obviously, Singapore is the shining example of vaccination. But at the same time, some of the tourism flow, which many Southeast Asian economies are very dependent on, that's also slowly coming back. So I think, Southeast Asia, ASEAN markets have lagged in 2020 and 2021. I think that sets up quite an interesting scenario for a much more constructive 2022.
Okay, Ty, listen, always great value talking to you. Appreciate your time this morning. You keep safe where you are, and we'll do it again soon. Ty Hui, JP Morgan Asset Management Live. Squawk is back in 2.
So, guys, in next half hour, I'll be doing like trading on FXTM. I'll show you how to use it, and we maybe do some live trading in next half hour or 1 hour. Okay, so I have to switch the screen to another computer, so I'll be right back